Focus here if you want to be a better Forex trader. Today, we're going to talk about how to get better. Our charts show price history, yet many traders focus on what's happening right now, thinking that they're ready to take on the markets. But if you're not very successful right now, let's do something different instead. Let's change it up and let's study. Now, as you can see, this economic news week is a big one. We've got lots of data coming out, and this can be a bit of a trap for Forex traders wanting to kind of take advantage of the volatility within the markets. Now, if you're a beginner, that can be an exciting thing. It can be something that gives you a bit of an adrenaline rush when you're going into the markets. But an experienced trader would tell you that this can be a bit of a tricky situation to deal with. Now, if you're not so successful in the Forex markets, I think a good thing to do is maybe when you've got news weeks like this is to not get sucked into the moves, okay? It's actually to go and do something a little bit different. Maybe go and study the charts instead. And that's what we're going to do in this video. I'm going to go over to the dollar CAD chart here. Now, this is just a random chart, and this is not something you can do yourself. I think what's very underrated in the markets is that we have all this price history to work with, yet many traders are focused on what's happening right now, trying to take split decisions on what's happening right now. Now, what I would do instead is, if I'm underperforming, what I'd like to do is reflect on past trades for one, but also go and check out the chart. Where do I want to be involved in the markets? Now, for me, I want to be involved at the big turning points, right? We can see that if the market moved from this high down to this low, that there is where I'm going to be making some money. If we move from this low up to this high, that's where I'm going to be making the money. Now, key areas to look at within these are the highs and lows, right? And I talk about this, if you view my live streams and things like that, we talk about this all the time. We want to be looking to buy from lows, sell from highs, okay? That gives us the better risk reward ratios and gives us more room for error, okay? Now, what I like to do is highlight those areas. So you can see I've highlighted all these different rectangles on the chart. Next thing we're going to do is we're going to go to a lower time frame. So this is the daily chart right now. I'm going to go to a 4-hour chart. I want to see how the market forms around this area. Is it clear that we get patterns around this area, or do I need to go to a lower time frame? So I'm just going to zoom out a little bit, and we're going to take a look at a couple of different patterns that can occur at these levels. Now, one of my favorite patterns to work with is the double top, double bottom pattern. I can see down in the left hand corner here that at this low the market makes a double bottom pattern, it breaks and it retests the neckline before we see a move to the upside. I can see here the market forms a double top pattern, breaks, retests the neckline, and the market moves to the downside. So I know that on the 4-hour time frame I can be looking for something like the double bottom or the double top pattern at these key areas in order to look for positions in the market. Another thing I like to do is to go a little bit lower. I like to see changes of trend on a lower time frame. So I'm going to go to the hourly time frame, and let's just zoom up to this example here. I can see that price obviously had recently formed a high within this area. The market moves lower, it comes back within this zone, and you can see the market consolidates. Now, I like to see consolidation. That tells me that the market is thinking about doing something, that the buyers and sellers are battling it out here, thinking that we're at fair value, okay? They're agreeing with price. That's why the market is arranging at that point. What we need to find out is, where does the market break after the consolidation? And we can see that the market breaks the consolidation to the downside and continues to move lower. So what I'm trying to say is, what we can do with the data that we have on the chart is we can go to those higher time frames, we can have a little look at what happens at those higher time frames and see if there's any kind of trading opportunities in line with price action. What I'm going to do is just delete all those drawings. I'm going to go to the daily chart, and I'm going to highlight an area of support and resistance. So let's say this area in here. I can see that the market has been trending a bit lower, and then it's kind of traded within a range, okay? I actually really love trading ranges because they're very, very predictable compared to trends, okay? Sometimes trends can pull back a little bit further than you expect before continuing, whereas trading ranges are really, really helpful, okay? I can see that the market, for one, created a low down through here and found support. I can see the market created a high, through here and found resistance. So let's go take a look at those on a lower time frame, and this will give us the opportunity to just visually take in what has happened at that area. And this is going to give us a lot of confidence, because we're basically replaying what's happened in the past so that in the future we know what to look for when it comes to a trading opportunity. Okay, so here we are, the market formed that high, we're back into that level here. What happens? I can see that we've got a couple of different types of trading patterns in here. First of all, I can see the market actually forms a head and shoulders pattern. We break it to the downside as we break this kind of neckline area. It's a bit of like a descending neckline at that point, but we break and we change trend. Most importantly, the market does come back up. So what we can do is start to get a little bit more advanced here, and we can start refining those areas. One thing I also like to do is, once we've highlighted that area and we see sellers come back into the market, I like to highlight where's that sell-in pressure come from, and I can say that the market has found some resistance here and has traded lower. We've come back to that area here, and the market has then sold off aggressively. Okay, so where are sellers getting in? They're getting in at around these levels here. You could argue a little bit higher up as well. The market goes and tests those levels, it breaks a low, and then we see that market trade to the downside. Let's quickly go take a look at what happens here at this support level. So the market comes back in. What do we see? We see a very big reaction from that point. Now if you just mark up in and around that area, you can see we come back, we retest it. The most important thing for me is looking for that change of trend. Now that actually doesn't come until we take out these highs, which is actually this candlestick here. Now that is then where you can see we actually get a lot of buying pressure. The market then comes back into that area where the high has been broken. It's telling us that the market's flipped now. Buyers are involved in the market instead, and that's where you can see another secondary opportunity comes from. So hopefully that makes sense. You should go and focus on those areas where the market has turned around before. Study the patterns, see what happens, make a note for the future. You can even back test, forward test this, and see how you can apply it to your trading. So thanks for watching this video. I hope it made sense. I hope you enjoyed it, and subscribe if you're new.